Good morning, everybody. We're going to get started here with a slight delay. We're waiting for our moderator to get into the room. It's going to be today presenting VID conferences or VID forums with Justin Dye, Chairman and CEO of Schwazze. Justin, how are you doing today?
Great, Todd. How are you? Glad to be with you.
Thank you. It's nice to have you with us. Justin's going to go ahead and present everybody. He's got 30 minutes to go ahead and give his presentation. And then at the end, we're going to have a 10 to 15 minute Q&A. So please, on the right side of your screen, you'll see a chat window. Drop your questions. Let us know what you are wondering within the company, anything you have for Justin or Nancy Huber, who will also be joining us. I'm going to go ahead and step out here and drop your questions. Let us know where you're from. Thank you very much. Good luck, Justin.
Great. Thank you. And thanks, everyone, for being with us. I'm here with Nancy Huber and our CFO, and Joanne Jobin, our head of investor relations. So glad to be here with you, and looking forward to engaging and talking about our company and where we're at today and where we're headed. So thanks for being with us. We are a leading vertically integrated operator. So that means growing and cultivation through manufacturing to retail development, and with really a focus on driving retail and then having the ability to create brands, and doing that in Colorado and New Mexico today. So we believe this is a pretty unique strategy, and really with regional focus. If you look at us by the numbers today, we're headquartered in Denver, Colorado. We operate in Colorado and in New Mexico. We have 33 dispensaries. We're number one by revenue in Colorado, and we're number two in New Mexico. We have 7 growing facilities, so cultivation. We have 115,000 square feet of indoor. We have 35 acres of outdoor, and we also have 60,000 square feet of hoop houses. We have 2 manufacturing facilities, one of which is in Pueblo, and the other is in Albuquerque, New Mexico. And our brands are Purple Bees, Our Greenleaf, Starbuds, Emerald Fields, and Grow Forth Gardens. Cannabis today. So why are we all here? Cannabis has tremendous momentum. As you look at 45% of the U.S. population is living in recreational legal states. 18 states is where cannabis is legal recreationally. And if you look at incidence rates, so usage in cannabis, 18% of the population use it annually, 11% of the population use it monthly. So category growing, certainly a social shift towards accepting cannabis, both for medical reasons as well as recreational. And we're seeing more and more states come online and legalize it. So as consumers are accepting, you're seeing the states listen to their constituents, which we think is very positive. Our strategy here at Schwazze is very simple. We started with this approach in our philosophy. So we really want to go deep with retail, meaning we want coverage with retail locations in the states where we operate, and we want to build significant presence there and have the shelf space and the ability to bring great products, great assortment with great quality and great service to a broad set of consumers. We believe by having a really good retail presence and running a great retail distribution network, then backing that up with very lean operations where we're very cost conscious and becoming very, very lean and efficient, which drives the ability for us to create new product brands as well as retail brands, and build a relationship with consumers and customers, both on the wholesale side and on the retail side. And then we've invested heavily in our infrastructure to be able to be very driven on data and information. So we measure and manage all the way from new product development to retail store performance, back to manufacturing of CPG items, as well as manufacturing distillate. So being data driven will continue to show progress and will fuel the business going forward. So the next slide really addresses why going deep, why does it matter? Why does it matter that you have 33 stores in a region versus 2 or 3? Or, for that matter, growing to 50 to 100. Having geographic coverage at retail and supplying a dense set of customers, really creating that shelf space that is in demand, and then working through that with your own products as well as third parties, both on the CPG side, so the edible side, as well as working through vapes and flower, et cetera, and giving the consumer a selection and choice to do that. We believe that's what the customer wants. They want great quality, great service, great products at a price for the occasion that they can afford and they think is fair. And we believe going deep with retail allows us to do that and to build a competitive advantage. Our house of brands. So we will have a number of what we would call storefront or banner brands, which include Emerald Fields, which is our boutique store, our cannabis boutique. We have our Greenleaf in New Mexico, and then Starbuds is really our Main Street operations here in Colorado. We have 17 Starbuds dispensaries, 10 our Greenleaf, and then we have 2 Emerald Fields today. And then Grow Forth Gardens is our cultivation network of growing very high quality flower for our stores as well as for other stores in our states that we serve. And then Purple Bees is both our distillate manufacturer. So we're one of the largest distillate producers in the state, where we sell to vape cartridge manufacturers, we sell to edible makers, et cetera. And then we also have a vape line that we have launched that has done very, very well. The consumers were very excited about. So we're happy about being able to launch some meaningful brands that stand for quality, stand for consistency at a good value. So we're going to continue to look at opportunities to do that as well. New Mexico. Why are we excited about New Mexico? We closed in February our Greenleaf dispensaries. We also bought Elemental Kitchen and Laboratory, which is the manufacturing facility, and then we also bought MedZen Services. And with all of that, we acquired manufacturing, so one facility, about 6,000 square feet. We bought 10 retail locations that we think are first-class retail locations with great people, great service. We really believe that we bought one of the best retail operators in the state that we can build from. And then we've got cultivation as well, all indoor, high quality cannabis that will certainly distribute to our stores. And as we continue to grow that capability and it's in demand, we'll look to also sell that to third parties as well. And New Mexico is projected to grow by 300% by 2026. So a lot of growth in New Mexico, and we're hoping to grow with it. So when you look at our go deep strategy, you can see our regional footprint between Colorado and New Mexico. If you look at Colorado by the numbers, Colorado's cannabis addressable market's about $2.2 billion per 2020. It was up a little bit with COVID in 2021, and 12 million incidences, so 18 plus. So there's 12 million folks or 12 million occasions where people are using cannabis, and the population in Colorado is about 5.8 million. And continues to grow. The usage continues to grow and demand continues to grow. In New Mexico, it's about a $200 million market as of 2020. We're seeing that continue to grow as we went from medical only to recreational use as well on April the 1st. So the population in New Mexico is about 2 million people. And, we're going to continue to see growth in that state from a population standpoint, maybe not as much as Colorado, but we really like the operating environment. We like what the rules are. There are plant count limits, so there's some discipline to the market, and we have a lot of opportunity to grow in New Mexico to the south, the southeast, to the north, and continue to grow around Albuquerque. And then we also have growth opportunities in Colorado as well, as we're principally in the Denver metro area, going down the southern part of the state down to Pueblo, Rocky Ford, Los Animas, So we've got a lot of opportunity to move both north and south as well as west in Colorado. Why brands matter. And first you start with retail, building a really good experience at retail, developing trust with your consumer, and then being able to create an experience with your store brand as well as product brands that you can bring to bear that stand for high quality, that serve a particular need, that the customer's looking for at a particular value. You can see where we're trading based on consensus. If you look at our Ebitda, our 2022 Ebitda multiple per, not our numbers, per the analyst community, we're trading about 7.6 times. When you look at really great consumer goods companies like Coca-Cola, P&G, Diageo, LVMH, et cetera, those brands are all trading in the mid-teens. So we certainly think there will be the ability to re-rate and to get multiple expansion on our EBITDA as we continue to grow EBITDA. And we think there's a few catalysts to do that. One is growth, size, and scale rewards better multiples. We also believe safe banking that's around the corner. We believe that will certainly help as we lower our cost of capital, have access to credit cards and more spending. And then we also think, obviously, descheduling of cannabis, which we are lobbying hard for. And I think America, it's not a political issue. America wants it. And depending on what statistic and what report you read, it's anywhere from 70% to 90% of adults are in favor of having cannabis legalized, which is very encouraging for the industry. Brand building and success. So we just went through why brands are important, and I can show you an example within our network where we had a product A who was clearly the leader. Product B was an up-and-coming brand. That product B we promoted and put promotional funds behind it and really put a lot of energy behind it with the vendor and the supplier. And you can see how we really flipped the order of that particular product brand in that category. And it was a big category. So the ability to create brands, create success with retail shelf space, with pricing and promotions and marketing, you can really see the power here where we took someone that was about, 10% or so, all the way up to 40% of a product category within our stores over a period of time. And you can see how it grew over on a monthly basis. So we can see that in multiple categories, and it's very exciting for us. Continue to see Purple Bees. So if you look at our brand building success here, we were able to take our vape cartridge that's built and produced by Purple Bees. We've taken it from, just 13 to 11% of the category up to 27%. Really with our retail execution and being able to promote it, having service behind it, and people trying it, experiencing the products, and then coming back and buying it again. Manufacturing production. So Purple Bees, as we said, is one of the largest, if not the largest, distillate manufacturing businesses in the state of Colorado. And you can see where we've been able to nearly double, if not triple, the output since we've taken over, where we're producing, close to 900 kilograms a month of distillate, where when we took over, it was just a fraction of that. So it's grown 189% since we took the business over in 2020. Mesa Organics. So you can see here, this is really about gross margin expansion. So running our retail operating playbook and working on merchandising, what products, what promotion, what placement, what facings, how are we going to support these brands in our stores. And you can really see the operating benefit of doing that, where we grew gross margins by 3.7% with these existing businesses, which is very exciting for us. The next one is Starbuds. When we took over Starbuds, we've been able to grow the gross margins there by nearly 5% at the gross margin line by running our operating playbook. And then you can see experiences here where we've been able to take our cost of goods sold down by 2% of overall COGS by negotiating, by working with vendors to finding a better way to save us both monies and to grow the business. Our management team is, we're better together than individuals. We've got a really great team. Nancy Huber, our CFO, Todd Williams, who runs retail real estate as well as M&A and growth. Naroop Krishnamurthy, our Chief Operating Officer, and then Dan Pabon, our General Counsel. Really proud of this team, and this team's done a lot over the last 3 years. Making a difference. This is a great business. We believe we're on the right side of history here, and that cannabis does a lot of good for people, whether it be anxiety, whether it be treating pain or sleep, or some of the fallout from cancer treatment, etc. So being able to not only offer great products that make a difference, but also giving back to our community, making sure that we're good partners with our local neighborhoods in helping support different initiatives from an environmental standpoint, working with recycled plastics from the ocean. We've got some packaging coming out that we think is a really great story, and we're excited to be a good steward of the environment as well. Our current capital structure, we do have just a couple of highlights here. I'm not going to go through each one of the numbers, but we have 53 million common shares outstanding. There is about 80 million in preferred shares on an as converted basis that we did about a year ago. And then we've got net warrants and options that are to employees and other warrants that are outstanding. So that gives us fully diluted shares of 138. And then you can see we have debt with convertible debt as well as senior debt of about 174 million. And then as of at this time when we published this, we had about 52 million of cash. So net debt's 122. So good solid balance sheet. When you look at it, our total debt to EBITDA is 3.2 times, so very manageable. And our net debt, when including cash, is 2.3. So we have a very good balance sheet. We have capital to continue to grow, invest in the business, and to do acquisitions. Peer comparison, it's really striking here. If you look at the green column where we're trading at 7.6 times, we continue to grow. We continue to produce very good numbers and to take and outgrow the markets where we're operating today. And, there's a number of cannabis operators that are valued at a higher multiple than us. So we really think we're trading at a discount. We think there's an opportunity to be more in line with these operators and to get a re-rate. So not only growing our multiple as we get larger, we think that's definitely an outcome, as well as growing Ebitda that multiple is taken against. So we think there's a double opportunity here to continue to grow value for our shareholders, and it's a good time to be in to the stock. Q4 performance and fiscal year performance, I'll hit a couple of highlights here. Total revenue this last year was 108 million for 2021 compared to 24 million in 2020. Adjusted EBITDA, we had negative 7.6 million in 2020 and adjusted EBITDA 32.2, which is nearly 30% margin. So really proud of what the team did of putting the business together, getting acquisitions integrated, deploying our operating system and driving efficiencies. And we're looking forward to having a good, strong 2022 on top of 2021. You can see the growth curve, both lines, both on the revenue and EBITDA side are both growing substantially. Grew revenue 352% last year, looking at about 67% this year. And then you can see our growth on the EBITDA line as well, growing close to 50% over time. Our gross margin going to 50% rather from 48%. And then EBITDA going from continuing to grow, but also staying about at 30% of revenue. So in last parting comment, this is a feel-good story. We believe we're building a really great company and making a difference in people's lives. And we're committed to unlocking the potential of the cannabis plant to improve humans' lives and our customers. So it's really great to be able to serve this industry and to have people really passionate about it. So with that, I'm coming up here on my 20 minutes. So I think we'll take a pause here and take questions.
Thank you very much. Todd, can you just make sure that my mic is working?
Good to go.
Okay, excellent. Thank you very much, everyone, for joining us this morning. My name's Joanne Jobin. I'm the IRO. That's the Investor Relations Officer for Schwazze, and I'll be moderating the questions this morning. So, and also I should mention that Nancy Huber is joining us. She is the CFO for Schwazze and will also be taking questions. So let's start. Justin, how many more dispensaries do you think you can purchase in Colorado and now in New Mexico? What does that business model actually look like?
Yeah, great question. Well, we have a lot of room in Colorado to continue to grow. You know, we have room to grow in Denver and to continue to dense up the market from a retail perspective. We also have an opportunity to grow in other parts of the state. So we like that. We like Colorado. We think there's a lot of growth still to be had here. If you look at the fragmented nature of the retail operating group here, there's north of 650 independent operators today. We have, we're approaching 23 stores. So we see a lot of growth to be able to continue to consolidate and to grow. And then I would say the same thing in New Mexico, where we have an opportunity to build new stores, get new locations with really good real estate on highly trafficked corners. And we're excited about that. And we also think there's could be some acquisitions in New Mexico as well. So we like our pipeline and we think there's a lot of growth to be had in both those states.
Excellent. So participant Michael Meltzer says, you had to hit the ground running in New Mexico as it went rec shortly after your purchase. Has your supply met the early demand? Any early analytic numbers from the dispensaries over there in the first few weeks?
Yeah, we let me handle a couple of things. So one is we had a great team there that we partnered with. So the Our Greenleaf team is still there. The executive team is continuing to drive and providing great oversight and taking on key positions there. We also hired a really strong division president in Steve Pear, who comes out of retail as well as CPG, spent time at Coke and Coors, and brings a lot of capabilities and leadership to the team. So with having said that, we certainly see, I would say this, we see more revenue growth closer to Texas. No surprise there. So we have a store in Las Cruces, and that store is doing quite well. Our other stores that have flipped from medical to recreational, we're seeing very good growth there as well. It's still early. We're within the first month, but I would tell you we're pleased with where things are going today. And then I think the team did a really nice job of being prepared with supply. So we've not had any supply issues today. But will there be supply issues down the road? Very well could be. We want to make sure that our stores are filled and we can take care of customers. But I think supply will become an issue probably later this year if I had to predict.
Okay. And what about the, let me see here, early analytic numbers? Do we have any of those, Justin? Can you speak to that?
Yeah, I would tell you we see substantial growth. I don't think we've given any numbers out on New Mexico yet. We'll do that in our next earnings report so everybody gets the information at the same time. But we're certainly seeing growth. Okay,
excellent. So James Thotham says, previously Schwazze provided Q4 2020 run rate revenue and Ebitda guidance. Can you provide any sense of how overall 22 revenues and Ebitda will come in? I think that's a question for Nancy.
Yeah, thanks. We haven't given any specific guidance for the year of 2022, mostly because as we add and integrate the acquisitions that we've got on the table, it's very hard to predict what all the timing is going to be, especially since we're still seeing quite a bit of COVID impact to our store improvement processes as well as the grow processes. So we believe we've timed the Q4 number correctly, but exactly how that's going to impact this year is harder to tell, and that's why we haven't given 2022 guidance.
Okay, thanks. And the second question from James is, in Q4 2021, Colorado experienced an unexpected decline in revenues. Can you describe how Colorado is shaping up over the past 4 months? And how has the recreational opening in New Mexico performed to date? Again, everybody wants to know how you're doing in New Mexico. Any observations or lessons learned?
Yeah, I think Colorado is a great case study. Big market. It's got great dynamics. We got a really, population growth in the state of Colorado is very healthy. It will be for some time. But the fact of the matter is we're cycling, if you look at 2-year stack comps, some months we're cycling 50%. Because COVID was very good to the cannabis industry here. So we saw some slowdown in the fourth quarter. I would tell you in the first quarter, we certainly have seen softness. And I think we should expect to have tough comps between now and really kind of the end of June, early July, and then things get a lot easier as we cycle through, very big comparables. So I would say first half of the year is going to be soft, and I think second part of the year we're going to see good growth coming back as we cycle that. And I think people should pay attention to the 2-year stack comps, that we're cycling and what the industry is cycling. The thing that I'm proud of is we've continued to outgrow the market substantially and continue to take market share, which really tells me we're doing the right things with our products, with our people, with our retail stores, and we're doing what we need to be doing. So the market's going to come back, but the first half's going to be a little soft.
Okay, and the last question from James is, with the recent decline in valuations and concerns, and as you think through your M&A pipeline, can you discuss or tell us what changes you may be seeing in the marketplace in valuation, structuring of deals, and or the type of acquisitions you may be pursuing?
Yeah, I think this kind of falls into the two baskets of there are things that you control, and then there's things that you don't, and then there's probably things in the middle that you influence. So maybe there's 3 buckets. But, with regards to the sector, and when you look at really kind of the new inflows of investors, it's slowed down dramatically. And I think individuals and the retail investor was looking for some good news around some federal legislation, which is coming. It will come. The timing of that is going to be dependent on really politics. Unfortunately, it's not really a party issue or political issue. You got both sides agreeing. But it really comes down to who wants to get credit for bringing cannabis to the broader market, which is sad, because the constituencies are certainly pounding the table for it. So when you kind of think about that sort of sets the table for the sector, and the sector is down, but the sector's got a lot of upside. So it's a great time to be into the sector and investing in it. If you look at us, on analysts' consensus, we're trading a little over 7.5 times Ebitda, with a lot of companies that trade much better than that in cannabis, as well as you look at branded companies that aren't nearly as profitable as us. So I really think this business trades in the mid-teens of Ebitda down the road, and we just have to be patient. We don't control that. What we do control is continue to execute really well, continuing to be smart about the deals and allocating capital. We are seeing deals coming to us, and I would tell you prices are becoming more reasonable, and people are more flexible with some of the softness that they're seeing with the market, and people trying to perhaps flip and make a quick buck. I think they're understanding this is a longer term game, and Schwazze is here for the long term. We're playing the long game. So some of these acquisitions are becoming more interesting, and they're coming to us, and pricing is getting better, and we're going to stay disciplined on it. So I think that's a fabulous question.
Thank you, Justin. what is your opinion on the Safe Banking Act and other regulation that affects the industry? Do you see an end to the restrictive regulations? And if so, when? And I know it's a loaded question. A lot of it depends on government, but what is your opinion? What would you like to see happen?
I think we will see safe banking. I think it's really about how the two parties are going to take credit for it and who gets credit. So I think there's still some work to be done between the Republicans and Democrats on the Hill to do that. I think we will see progress over the next 2 years. I can't say it's going to happen at the mid-year election, but certainly could be next year. And then I think you are going to see federal descheduling at some point. What all comes with that? We need to evaluate. Certainly, we want those that have been prosecuted. We want their records expunged. If it was a nonviolent crime, get people a chance again to have a fruitful life and a productive one. So I think we got to see what all that means on the social equity side and some of that. But I think in general, people they agree more than they disagree. And this is one of these classic things where you scratch your head and you just don't understand why in Washington we can't get this thing right. And we're going to keep lobbying. We're going to keep pushing and talking about why it makes sense and the common sense around getting safe banking so we don't have to carry as much cash, so we can offer a better 401k plans to our employees, give our employees the opportunity to grow their careers. And those are all things that we're passionate about. We're going to keep lobbying hard for them.
Excellent. Great answer. Okay. Participant Tommy Launer. The sector has had difficult times. However, Schwazze seems to be one of the few ones on a profitable path. Why do you think the market is still ignoring Schwazze? Is it because you're not on any major stock exchanges, such as the CSE or the TSX? Justin.
Well, I think there's a few reasons. One is our story is not well known, and that's why the three of us are on here today, and it's why we're going to be working really hard the rest of the year to make sure people know who we are. That's number one. Number two is we're competing for investment dollars. I was having a conversation the last couple of days, and we're competing with these individuals who there's only so many dollars that are investing in cannabis because a lot of the institutional money cannot come in because it's Schedule I drug. So I think you're competing with some of the larger names that maybe have had some first mover advantage. I think we're getting our day in the sun. People really understand our growth, how good our team is, that we're growing market share. And if you look at it on a risk adjusted basis, it's a very safe investment to put your money behind a team that's going to execute and create cash flows and continue to grow and build value. So those are the things that we're focused on. And I think I certainly it would help us if we could be listed on the New York Stock Exchange or be listed on the NASDAQ until we get a capital markets provision or descheduling. That's not going to happen. So, we're going to continue to get analyst coverage and tell our story, continue to execute. And over time, it just takes time to build a following. And that's what we're working on.
Okay. Pete Farrell, he wants to know, how has inflation affected you both in labor and COGS? Nancy?
Yeah, so, we've seen a little bit of an increase in cost of labor. COGS, we have not seen a significant increase in at this point. We haven't seen any particular impact other than the fact that freight has gotten more expensive. So as we do capital projects, et cetera, and have to bring stuff from a distance, it's gotten more expensive. Freight within the state, there's not a lot of movement of the product, so that's not affecting our product costs significantly. But we have seen it impact capital improvement projects.
Raw materials, transportation and getting it from Asia, some of your raw materials, et cetera, as we're building out hoop houses and various construction projects. We have certainly seen inflation in some of those key categories, but as Nancy said, on the COGS side, it's been very manageable.
Yeah, we've actually seen, I think, more impact from COVID hitting in terms of delivery times than any inflation impact at this point. So projects have been delayed a little bit because we haven't been able to get equipment on the schedule we originally anticipated. That's been a bigger impact to us than inflation.
Okay. Jeff Lilly wants to know, Justin, can you remind us of the New Mexico licensing environment? How many licenses, capped, etc.?
Yeah, so there's a general uncapped ability for people to come in and apply for retail locations today, as well as growing and manufacturing, but you have to go through the process. There is a cap on the number of plants that you can grow. And I think there's also going to be, certainly there's a lack of product in the state that I think we're going to see that for the next couple of years kind of impact the supply demand curve. But, in terms of people coming in, it is not a limited license state per se, just to be clear. If people apply and on a merit basis, they certainly can get a license today. I think you're going to have to compete like you do in other retail businesses with great locations, great service, great products at a good price. And we're very comfortable competing on that basis. And, we think the more competitive New Mexico gets, the better, we will do. And, we're building it to scale in that fashion.
Thank you, Justin. In the past, you have purchased dispensaries at 3 to 4 times Ebitda. What form of Ebitda growth has your team been able to achieve going forward? And are you looking closer to 3 times Ebitda in those purchases going forward? Has that changed at all?
Yeah, I think it really depends acquisition by acquisition, but I would tell you that, that's still sort of the targets where we're buying things today. And certainly we, through cost improvements and synergies and best practices between our teams and their teams, we're seeing, somewhere, using a, 1 times multiple, being able to lower it by the synergies. That's probably a reasonably fair viewpoint, but it really kind of depends. But we're going to continue to stay aggressive and work on things that make sense for our strategy and fill in holes from a retail distribution standpoint. We'll continue to look at opportunities around developing products and partnering with manufacturers to bring more items to the shelves that customers want to continue to grow our sales. That's kind of the nature of the business, and we're going to keep working on that.
Excellent. And can you comment, Justin, on the downward pressure of the market right now? Are you actually seeing more deals come to the table because of that? Has it affected your ability to actually make deals going forward, or what's happening with the pressure on the industry right now?
Well, well, certainly you're seeing price pressure on the wholesale flower market. So you're seeing considerable pressure for what I would say sort of standard / lower quality flower. It's off considerably. If you look at high quality flower, pricing hasn't changed that much, to be honest with you, but it's certainly leading a number of growers to turn the keys over to whoever their landlords are in some cases, or abandon operations or look to jettison the business on the growing side. So we're certainly seeing that, and obviously those prices then translate into wholesale distillate prices, so lower distillate prices. So we are selling a kilogram of distillate for less than what we were selling at last year, which fortunately we've been able to lower our cost structure to be able to offset some of that, but you can never recapture all of that. So those are the things that we really kind of see from a softness perspective. On the retail side, we certainly benefit from it because we still source the majority of our flower externally, and we're just working on bringing flower internally through our vertical integration process. So we've benefited from that, the pressure on pricing, particularly on the flower side this year.
Okay. And one more question from James. What regulatory, financial, or operational differences are you seeing in New Mexico versus Colorado? And is that affecting or changing your growth strategies?
Well, there's certainly differences. I would say, based on some of the individuals we have on our team that have been around cannabis and been around the great state of Colorado for the last decade, they would say New Mexico's a few years in the rearview mirror of where Colorado is today, which makes sense as they just flipped the recreational switch, the adult use switch in April. So we're certainly seeing that. I would tell you real estate's tough in both states, trying to find good real estate where you could open dispensaries, et cetera. But we really like New Mexico. We've got a good relationship with the state and the governor there, as well as the mayor of Albuquerque and some of the other jurisdictions. And there are certainly nuances between jurisdictions and nuances, between New Mexico and Colorado. For instance, Roswell City Council has not allowed us to open recreational there, and their local jurisdiction won't allow anybody to open today. So we're working with them. So Joanne, this is really a local business, state, and really by city and town.
And then on the financial side, New Mexico is much more vertically integrated because that's how their licensing structure has been set up. So what you see in New Mexico is that most of the products in our stores are products that we make internally. So they'll obviously have some better, more vertical margin. Where in Colorado, we purchase more of our product on the outside today. We've talked about the fact that we're trying to move Colorado to that 50% mark. And I think what we'll see is New Mexico will migrate the other direction. And so eventually we'll probably be 50-50 in both states. But today, New Mexico is more vertically integrated and Colorado is less vertically integrated.
Good comment.
Good. And David White wants to know, what is your market share in Colorado and where are you currently? Best opportunities, greatest challenges. I think we spoke a little bit about that. But I think it's a good question to answer as far as where are you at with your market share, and also what are you feeding your dispensaries? What is your breakdown versus product you yourself supply as opposed to product that you purchase? Where are you on that scale?
Yeah, if you look at, let's just take 2021, almost 100% of the product is third party. So that is partnering with CPG, with edible manufacturers, vape cartridge manufacturers, flower growers. So that's really how we see that. We do see a few more products of our own coming on the shelves, but as we've said, we really want to stand for variety. So if you look at last year, our own products represent a very small, de minimis amount. Going forward, you'll see us, we'll probably get to targets of 20% to 30% of our own products over time, where we think we can create value and offer the customer something that's meaningful to them and is different. So that's really our strategy. So we're going to be a good partner with growers, third-party growers, and we're going to be good partners with other manufacturers. When we hope to grow, 50% of our flower in the flower category is sort of where we hope to drive that. In terms of market share, we really don't provide those numbers, but it really depends. We look at it by business unit, and we look at it, for instance, the distillate market versus the vape cart market versus retail. So we've got I would say this, we got a long way to grow, even though we're the largest.
A long way to grow. I like that. Okay. Here's a really interesting question. Does the illicit market supply tend to impact Q4 and Q1 quarters more than Q2 and Q3? So I guess he's asking you about cyclicality and how it impacts, if it impacts.
Yeah, demand really makes the middle quarters our strongest quarters. So it's really a demand-driven thing. It's not a illicit market thing per se. Certainly the illicit market is still here in Colorado. I think the MED's done a nice job of setting rules and enforcing those rules. There's always room for improvement. And then I would say we believe that the illicit market has had a very large impact on New Mexico. And we see the governor and we see, the local jurisdictions committed to enforcing the rules and making sure everyone plays by the rules. And, frankly, we're better by having all the product tested, making sure it's safe, so we know what it is, et cetera, for consumers, where the illicit market cannot offer that today. And so there's real value there.
Yeah. I think the bigger thing, Justin, that impacts Q4 and Q1 is the outdoor grow cycle. So, they harvest the outdoor grows in October and November, and that availability of a large amount of product at once impacts the pricing more than the illicit product market.
That's a big factor,
right?
Too.
Illicit, obviously, a lot of illicit is outdoor grow, but that is, I think, just in general, the outdoor grow situation impacts it.
Excellent. And what is the company's philosophy on facility sale / leasebacks versus ownership from a capital structure standpoint?
Well, we would love to own a portion of our real estate. It's a good asset class. You can finance off of it, but once again, it's the cost of that capital. It's the cost of owning the real estate, and I would say our cost of capital is one where it's really tough to get a really nice return out of real estate assets per se. So I think over time you'll see us trying to own more of those, but right now we're certainly partnering with a number of partners that want to own real estate and lease them back to us. So it's more efficient use of capital for our structure today.
Okay, excellent. And we're going to wrap up here shortly, but one last question. Tell us why Schwazze is different from the other MSOs out there. What is the advantage for Schwazze?
Focus, operational expertise, and discipline. And I think our team is really, really good, and we know what good looks like, and we've got a track record of winning and knowing what it takes and working together. So I would say it's team, it's our people, it's our focus, and our ability to execute.
Excellent. And before we end, I do want to bring up a couple of comments from people who have said, Pete Farrell says, I just wanted to say, I think you are all doing a great job. And Mark said, thank you for buying shares on the open market. Investors have been talking about it, and it shows your commitment to the company and supporting the share price. So with that, I will end today's VID forum. Thank you, everyone, for joining us. It's been a great almost hour. Justin, you've done a great job. Nancy, thank you so much. And if anybody has any other questions that they have, you can always reach me at joanne.jobin@schwazze.com or at info@schwazze.com. I'm happy to answer any questions that were not answered today.
Joanne, thank you. And by the way, I bought the shares because it's a great investment. It's not to show anything.
That's right. That's
okay.
right. Yep. Thank you so much for joining us today.
Okay, bye now.
Bye-bye.
All right. Take care. Bye-bye, everyone.